Copper, and more copper. Welcome to the Northern Miner Podcast. My name is Adrian Pocobelli. Just an enormous amount to go through today. Wonderfully. What a beat this mining beat is. It is truly astonishing what is happening. As we saw with the massive bid by BHP for Anglo American, we have a full in-depth interview with the editor-in-chief of mining.com on the story of, again, BHP's bid for Anglo American. A fascinating, very complex story. As you're going to learn, or as you may already know from reading the articles, we're going to have more in-depth on it, go back into the history and where this deal is going. So turning to copper. Copper is at $4.63 per pound as I speak here. And I'm just looking at this on CNBC, and I brought up their maximum chart going back to 1989. And it's quite interesting where we are right now. This morning, we were at $4.66. The last time we were in this area was in January of 2022, when we had a close of $4.75 and an intraday high of $5.04. So again, that was in January of 2022. And the time before that was way back in October of 2010, when we hit $4.50 per pound as a close and as an intraday high. And then before then, you have to go all the way back to April of 2008, when we hit $4.65 as an intraday high and a close of $4.27. So all to say, we're at a pretty significant level. And it looks like $5.03 from what I've seen here is the intraday high from what I can gather here from the CNBC chart. Now, it seems to me, as I look at this chart, it looks a little bit like a cup and handle as well. And I don't know if you'd call that a triple or a quadruple top, but this thing looks like it's ready to launch. And from what I can tell on this chart, once we close above $5, we're in the land of price discovery. So then we'll see what happens. The animal spirits are quite strong right now in favor of copper, which suggests that it's not going to happen right away. But all to say, there is a lot of investment demand right now, as many of the stories point out. So copper is a big deal, and we have the big takeover offer from BHP, which we will look at in depth further on in the program. Now, to follow up on previous narratives here, quite an interesting headline on CNBC. Wait till you hear this. Europe may need to impose tariffs of up to 55% to curb Chinese EV imports, according to a report. So this is Dylan Butts at CNBC. It says Rhodium Group, which expects the EU to impose tariffs in the 15 to 30% range on Chinese EVs, said those tariffs were unlikely to be enough to check competition from China. Quote, much steeper duties of around 45% or even 55% for fiercely competitive producers like BYD would probably be necessary in order to render exports to the European market unappealing, end quote. And here's one more quote from the report. Quote, even if the duties come in at the higher end of this range, in the 15 to 30% range, some China-based producers will still be able to generate comfortable profit margins on the cars they export to Europe because of the substantial cost advantages they enjoy, end quote. And then back to the CNBC article, BYD's Seal U model, which sells for 20,500 euros in China and 42,000 euros in the EU. So it sells for more than double for the same car in the EU versus China. Very interesting. And there's a whole lot that could be said about that, isn't there? In a sense, it seems to me they're trying to raise the standard of living of their own people, offering them the cars cheaper. Well, let's charge the Europeans, double, and we'll still be cheaper than the local competition in Europe. I mean, this is where we're at here. This is what happens when you invest 20 years in the supply chain, as China has been doing. This is what you can do. I mean, it's quite astonishing. Let's continue here. In China's home market, the 20,500 BYD Seal U model, they'll make a profit of 1,300 euros versus 14,300 euros per car in Europe, according to Rhodium. Even after 30% in tariffs, a company like BYD will make a higher profit in the EU. So that is where we're at. Now, looking at car manufacturers in Europe, check this out. Volkswagen profit drops 20% in first quarter on lower sales. This is Sophie Kitterlin at CNBC. German carmaker Volkswagen on Tuesday said its operating profit dropped by 20% in the first quarter of 2024 compared to the same period a year earlier. The company cited lower sales and higher costs as key factors. So they're getting undercut by China while their costs are moving higher. And this is probably before the last move we've seen in metals just in the last, let's call it, month. This is before copper made its big move. So where is this leading? And are tariffs really going to solve the problem? So interesting headline there. And then we have another headline also this morning. Jeep maker Stellantis reports sharp fall in revenue as it shifts car portfolio. This is Jenny Reed at CNBC. Global automaker Stellantis on Tuesday reported a 12% decline in revenue in the first quarter, citing lower sales and foreign exchange effects, even as net pricing held firm. The Netherlands-based company, whose brands include Chrysler, Dodge, Jeep, Peugeot, Citroën, Maserati, plans to launch a total of 25 new models this year, including 18 battery electric vehicles. Like many in the auto industry, Stellantis is juggling the ambitious commitments to the electric transition with supply chain challenges and questions over consumer demand and readiness of charging infrastructure. As I've long commented on here, cars are too expensive, in my opinion. They're just too expensive. And so now the car companies are wondering, why is there no demand for electric vehicles? Is because on the cheaper end of the range is, a $40,000 US car. For a Canadian, you'd have to make $60,000 a year just to buy a car, and that's before you've paid your taxes. So how much do you need to make in order to buy a $40,000 US car in Canada, for example? So I think China has figured this out, which is why they're saying, hey, here's your $10,000 car. Probably in China is where they're selling it for that cheap. Now that we've learned there's two prices, the cheap price for the locals and the expensive price for the Europeans. So that is interesting. And then a headline out of Bloomberg, skip the robotaxi, Tesla investors want a cheap EV. And of course, Elon Musk was basically pivoting to robotaxis after being quoted as saying that BYD was going to demolish all the car competitors if tariffs aren't imposed, because right now it looks like nobody can compete with the Chinese on price. So this is a situation. Now, I want to bring another angle to this whole story, which I think is quite interesting. This is from mining.com last week. Caterpillar warns of weaker sales as machinery demand cools. So I'm wondering if we're starting to see the same thing happen across the board, including Caterpillar, who of course is the big provider of mining and construction machinery. And here's just a quick quote. Caterpillar warned of a sales fall in the current quarter after reporting a small decline in first quarter revenue on Thursday, sparking worries that a months-long boom in machinery demand may be coming to an end. Shares of the global economy bellwether fell 3.7% in pre-market trading after the company reported weak construction equipment sales in all regions except North America, which gained from President Joe Biden's $1 trillion 2021 infrastructure law. And so, interesting issue there, isn't there? So in North America, their sales didn't fall, but everywhere else, their sales fell. And one wonders, is there a Chinese competitor? I had heard of a Chinese competitor. I asked ChatGPT, who is the Chinese competitor to Caterpillar? And this was the answer. The Chinese equivalent to Caterpillar is Zhuzhou Construction Machinery Group, XCMG. It is one of the largest construction machinery companies in China and ranks among the top construction machinery manufacturers worldwide. XCMG manufactures a wide range of heavy machinery, including cranes, excavators, wheel loaders, road construction equipment, and more. The company has a significant presence in China and has expanded globally with operations in various countries around the world. And I followed this up with a question, is XCMG's equipment cheaper in price? And the answer, yes. Equipment from Chinese manufacturers like XCMG is generally cheaper in price compared to their counterparts from Western brands such as Caterpillar. There are several reasons for this. One, cost of production. Labor and production costs tend to be lower in China compared to the United States and Europe. This allows Chinese companies to manufacture equipment at a lower cost. Economies of scale. Chinese manufacturers often produce equipment in large volumes, which helps reduce the cost per unit. And of course, 3, materials and components. The sourcing of materials and components domestically within China can be cheaper due to local availability and lower transportation costs. And this is a very important point that, frankly, I've never thought of. But another inherent advantage that China has by having metal processed in their country is if you're going to manufacture a car in your country, you don't need to pay for the transportation of the metal to get to your factory. It's maybe a 20-minute drive or an hour drive or a 3-hour drive versus putting it on a ship and sending it to, country X 13 days away in a different continent. How much more do you have to pay for that metal if you're in North America and you're getting your metal from China? What is the cost of that? Surely there's a cost, a transportation cost for your materials. And finally, 4, market strategy. Chinese companies may also price their products competitively to gain market share internationally and within domestic markets against established brands. So very interesting. And, there's Emmanuel Macron. Not sure if you saw those clips on Twitter giving a speech at the Sorbonne with dire words. And here's the quote: "Our Europe is mortal. It can die." End quote. And of course, it recollects that report we saw from Mario Draghi that we were reading last week, where Draghi was basically saying, the logical outcome of higher production costs in Europe is that we will lose our industries. And interestingly, I heard a report that was saying that France was now backing, if I remember right, Mario Draghi to head the European Union over Ursula von der Leyen, whose term is coming to an end, and I believe wanted to renew it. And that she had lost the support of France, who is now favoring Mario Draghi. So one wonders if there is an economic component to that decision, but all pure speculation over here. Now, continuing on, as we run through all of these stories, we've been talking about the eastern part of the Democratic Republic of Congo, where there is a conflict with Rwanda, and more specifically with these M23 rebels that some people are blaming on Rwanda. Of course, as we've pointed out here on this show, there are very important minerals in this area, specifically tantalum, which is a derivative of coltan, which is important for electronics. And now we got this headline from a report by the AFP. Democratic Republic of Congo accuses Apple of using, quote, blood minerals, end quote, from war-torn East. So it seems to me that the DRC is now saying, hey, Apple, if you're getting your tantalum or coltan or whatever other mineral from this area, these are, quote, blood minerals, end quote. So let's just read a couple of paragraphs here. The subheadline: the government of the Democratic Republic of Congo is accusing Apple of using, quote, illegally exploited, end quote, minerals extracted from the country's embattled East in its products, lawyers representing the African country said Thursday. The DRC's lawyers have sent Apple a formal notice seen by AFP, effectively warning the tech giant that it could face legal action if the alleged practice continues. The Paris-based lawyers accused Apple of purchasing minerals smuggled from the DRC into neighboring Rwanda, where they are laundered and, quote, integrated into the global supply chain, end quote. Contacted by AFP, Apple pointed to statements from its 2023 annual corporate report regarding the alleged use of so-called conflict minerals that are crucial for a wide range of high-tech products. And here's the quote from Apple. Based on our due diligence efforts, we found no reasonable basis for concluding that any of the smelters or refiners of 3TG, and 3TG refers to, as it says here in parenthesis, tin, tantalum, tungsten, and gold, determined to be in our supply chain as of December 31st, 2023, directly or indirectly financed or benefited armed groups in the DRC or an adjoining country, end quote. So it's an interesting tactic by the DRC to try and put a halt to this conflict. They're saying, basically, Apple, if you're buying metal out of Rwanda or from these M23 rebels, or that it can be affiliated with it, you're under notice that we may sue you. Quite interesting. And the letter was a cease and desist notice. And finally, one other quote here. They said their products are, quote, tainted by the blood of the Congolese people, end quote. Now, this came just after the judge ruled that Tesla and Apple have no responsibility if they buy metals in the supply chain, that they are not responsible in any conflict that may have occurred in producing them. So that issue has not gone away for big tech as far as sourcing these critical metals like cobalt and tantalum from conflict zones. Now, finally here, let's take a quick look at earnings. Newmont beat quarterly profit. Production estimates on Newcrest assets boost. This is Reuters via mining.com. Newmont beat Wall Street estimates for first quarter profit on Thursday as the world's largest gold miner benefited from strong production and higher sales. Quarterly attributable gold production in the quarter rose to 1.7 million ounces from 1.3 million ounces a year earlier, boosted through sites acquired following its acquisition of Australia's Newcrest for $17 billion in November. Analysts had estimated a production of 1.61 million ounces, so they outperformed with 1.7 million ounces. Sales in the quarter were $4 billion compared with $2.68 billion a year earlier. Shares were up 6.6% in morning trade. And a Scotiabank analyst wrote, quote, "We view this release as positive to the shares given the earning per share beat was mainly driven by better operating performance," end quote. All sustaining costs for gold rose to $1,439 per ounce of gold from $1,376 a year earlier. So that was Newmont. We also had Freeport McMoran, and they reported strong financial results with the average copper price realized at $3.94 per pound during the quarter. They posted a revenue of $6 billion for the quarter, which surpassed analyst expectations, and earned a profit of $473 million or 32 cents per share, also exceeding Wall Street forecasts. Gold sales were reported to be in line with estimates. And also, Freeport has been facing an issue in Indonesia with a ban on the export of copper concentrate from the country, and a headline came out April 29th. This is Reuters via mining.com. Export extension for Indonesia's Freeport should be considered, minister says. So Indonesia's investment minister said on Monday that authorities should consider allowing Freeport Indonesia to export copper concentrate beyond May, as its new smelter will not be able to immediately absorb all of its output. So perhaps more good news for Freeport Indonesia. So coming up, we have Cecilia Jamasmie, editor-in-chief of mining.com. We go in depth on the BHP Anglo American deal, where we are in the deal, and we go into the history of Anglo American and really how complicated this story really is, because Anglo has so many different companies under its purview, such as De Beers, such as the platinum and iron ore companies in South Africa, as well as the copper projects in South America. So there's a lot to go through, and we go in depth. We discuss it to try and figure out what's going on. If you want to find us online, you can find us at northernminer.com. You can find us on Twitter at northernminer, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. And turning to the website, the story of the hour, Anglo American rejects BHP's undervalued $39 billion U.S. bid. And this is Cecilia Jamasmie on northernminer.com. Anglo American has rejected a $39 billion U.S. takeover proposal from BHP that requires Anglo to divest its platinum and iron ore businesses in South Africa. BHP's unsolicited offer, quote, significantly undervalued, end quote, the 107-year-old mining company and would be, quote, highly unattractive, end quote, to its shareholders, Anglo said on Friday in a response widely expected by analysts. Quote, the BHP proposal is opportunistic and fails to value Anglo American's prospects, end quote, Anglo chairman Stuart Chambers said in the release. The bid contemplated a structure Anglo board says is, quote, highly unattractive for Anglo American shareholders, given the uncertainty and complexity inherent in the proposal and significant execution risks, end quote. BHP's proposal is valued at £25.08 per Anglo share, a 14% premium to the target company's closing price on Wednesday, a week ago. Under takeover rules, BHP is required to either make a solid offer for Anglo American by May 22nd or walk away. The rejection wasn't a surprise, BMO Capital Markets said in a note on Friday. Quote, although it is already a slightly accretive deal for Anglo shareholders, there would appear to be room for an increase, end quote, mining analyst Alexander Pierce said in a note. Quote, it's not a straightforward deal, though, and the complications do make things more uncertain. Now the onus is on management to show shareholders it can drive increased value, end quote. So to set the table on this deal, that was from April 26th. Then on April 27th, we have another story. This is Reuters via mining.com. BHP considered improved proposal for Anglo American after bid rejected. BHP Group is considering making an improved offer for Anglo American after its $39 billion initial proposal was rejected by the London-listed miner. A source familiar with the matter told Reuters. BHP is in discussions on a revised bid for Anglo American to be made in coming weeks, the source said. The deliberations are ongoing and the group has not yet made a decision on the size and structure of the new proposal, the source added. So that happened. And then South Africa weighed in. This is Reuters via mining.com. South Africa scrutinizes BHP bid for Anglo weeks before election. So there's an election coming up in South Africa, which also complicates this deal. And just a couple of paragraphs here. South Africa's government is scrutinizing BHP Group's proposed deal to buy Anglo American. A spokesperson said, with the deal likely to concern officials the coming weeks before a general election where the governing party's majority is at risk. The deal, worth about $39 billion, would involve Anglo exiting its platinum and iron ore assets in South Africa. It could trigger large capital outflows and further dent the country's reputation as a destination for mining investment. Anglo's potential exit would mark the end of an era for a company founded in Johannesburg over a century ago. South African miners have been cutting thousands of jobs, curbing investments, and paying much less tax in response to weakening metal prices and a myriad of local challenges, including a crisis at the state port and freight rail company. So, interesting story there. And then there was a story from PrimeMediaPlus.com, which was quite interesting. And this came out just on April 29th, so the day before this broadcast. Why BHP Billiton is reluctant to invest in South Africa's mining sector. Mineral Resources and Energy Minister Gwede Mantashe says government would block BHP Billiton's proposed takeover of Anglo American. Anglo American mines diamonds, platinum group metals, and iron ore in South Africa. Speaking to the media in Pretoria on Monday, presidency spokesman Vincent Mangwenya alluded to the South African Investment Conference, where investment pledges were made towards business projects in the country. So interesting report from Prime Media. And that's on PrimeMediaPlus.com. And we have another story here. South Africa votes 30 years after Mandela's victory, but mining challenges persist. This is April 26th from Henry Lazenby at northernminer.com. South Africa goes to the polls on May 29th after 3 decades of democracy, but even a transformed mining sector faces persistent challenges, the industry says. South Africa has produced some of the world's mining heavyweights, including Anglo American, Sibanye-Stillwater, Goldfields, and Impala Platinum. Post-apartheid reforms have dramatically reshaped the industry, which provides among the country's best-paid industrial workers and has promoted women. But countrywide unemployment around 40%, persistent power blackouts, a murder rate of 46 per 100,000 people compared with 6.3 in the United States, and government corruption weigh on the industry. The ruling ANC's policies promoting black empowerment have diminished international confidence. Impala and Sibanye-Stillwater expanded to North America. Anglo faces a takeover bid. The nation celebrates Nelson Mandela, but struggles to rekindle what he inspired. And we have a quote from Industry Association Minerals Council South Africa CEO Mzila Mthengane, who said in an April 25th statement, quote, while aiming for growth, the mining industry has an unrelenting focus on transformation and inclusion. As we strive to address our legacy, we acknowledge the significant strides in the transformation of management, inclusion of women in all aspects of mining, and improved health and safety, but we have more to do. Continuing on, BHP's bid for Anglo casts cloud over $9 billion fertilizer mine. This is Bloomberg News via mining.com. BHP Group's proposal for a $39 billion takeover of rival Anglo American is all about securing plenty of copper supplies, so now the potential deal is throwing uncertainty over the future for Anglo's massive fertilizer mine in England. That's largely because BHP is already building its own giant fertilizer project in Canada called Jansen, to which it's already committed more than $10 billion. With an accelerated expansion plan for Jansen, BHP is unlikely to be interested in also going big on Anglo's Woodsmith site. Underscoring the doubt is the fact that Woodsmith project involves polyhalite, a relatively obscure fertilizer product with unproven demand. The project has a checkered past. Its previous owner, Sirius Minerals, rode a wave of retail investor enthusiasm to develop it, only to fail to raise the final piece of financing. So Cecilia also discusses this in our upcoming feature interview. And finally, China could hinder BHP's bid to become top copper producer. This is Bloomberg News via mining.com. BHP Group's $39 billion bid to create a global copper giant risks irking its biggest customer, China, where authorities have a history of intervening to stymie or water down international mergers. A takeover of Anglo American would catapult BHP into the top spot for copper producers with 10% or more of the world's output. That would be a red flag for Beijing, which has long bemoaned China's weak purchasing power against the miners that dominate trade in raw materials. And we have a quote from Bloomberg intelligence analysts Grant Sporey and Alan Olsha, who wrote, quote, "This may invite close scrutiny from a competition perspective, specifically China's smelting industry," end quote. The deal comes just as Chinese copper processors are struggling to turn a profit on supplies from miners like BHP. The potential for Chinese involvement, perhaps by forcing asset sales in exchange for approval, is among a swath of challenges that BHP Chief Executive Officer Mike Henry faces in pulling off an ambitious but complex deal. Foremost, of course, is Anglo's rejection of the bid, which it says significantly undervalues the company. So many stories, as you've probably read here on this bid. Just another story which takes us into a different issue. BHP megabid and $10,000 copper expose mining's biggest problem. This is Bloomberg News via mining.com. Copper surged to $10,000 a ton just days after the bombshell news that BHP is trying to buy Anglo American is highlighting a core disconnect at the heart of the industry. Miners just aren't building enough mines. The biggest producers all want to increase copper output to take advantage of rising demand in electric vehicles, grid infrastructure, and data centers. BHP has made its $39 billion proposal to Anglo American in large part because the world's biggest miner wants to grow in copper. Yet that bullishness still isn't translating into the huge investments involved in developing new pits and shafts and associated infrastructure. A successful takeover would make BHP the biggest copper producer with about 10% of the market, but it won't make any difference towards meeting the world's supply needs. Production from existing mines is set to fall sharply in the coming years, and miners would need to spend more than $150 billion between 2025 and 2032 in order to fulfill the industry's supply needs, according to CRU Group. And here's a quote from Bernard Data, senior commodities analyst at Natixis SA. Quote, "Copper looks like the last remaining supply risk for the EV industry. In a net zero scenario, we're going to need a vast amount of copper, and we're going to need a different strategy to boost supply." So not enough mines are being built. And following this thread, we have another story here. Codelco output keeps falling, underscoring copper struggles. This is Bloomberg News via mining.com. Top copper producer Codelco reported a decline in quarterly output due to lower quality ore at its aging Chilean mines, the latest sign of supply-side struggles that have helped send metal prices to two-year highs. The state-owned company's wholly owned mines produced 295,000 metric tons, down 9.6% from the first 3 months of last year, Codelco reported Friday. The result was telegraphed earlier this month by Chairman Maximo Pacheco, who said the first quarter came in at 99% of an internal target. So they are 10% down. Incredible. So no relief in sight for Codelco. Another interesting headline here, half of all copper mining is at drought risk with climate change. This is Bloomberg News via mining.com. And it says here that more than half the world's copper mines will be in areas exposed to drought risk that's deemed significant by 2050, according to a PricewaterhouseCoopers report. For two other energy transition metals, lithium and cobalt, drought exposure is even higher at 74%, the study found. You know, there's all sorts of things that can happen in the real-world business of mining. Another headline here, BlackRock says $12,000 copper is needed to incentivize new mines. This is Bloomberg News via mining.com. And here is a quote from Olivia Markham, who co-manages the BlackRock World Mining Fund. Quote, "When I look at the price today, I think it's well below the pricing levels we need to incentivize new greenfield production. Structurally, we need more copper units, and currently, I don't see those big blocks of new supply coming through. End quote. As I began this whole episode, copper, here's another headline. Copper price hits $10,000 a ton as BHP bid shows tight supply pipeline. Bloomberg News via mining.com. Continuing on to a few more headlines here as we wrap up. Vale and BHP offers $25 billion settlement for Mariana disaster. Authorities seek more. So this relates to Vale and BHP's Samarco joint venture and the 2015 Mariana tailings dam burst. Vale and BHP are offering $25 billion, but authorities are not satisfied. And here is the top prosecutor of Minas Gerais State, Jarbas Soares Jr. Quote, I am not satisfied with the final amount, but with the company's stance of seeking something more compatible, yes. So could be an expensive month for BHP. It's incredible how much cash they have on the sidelines. Another headline, First Quantum to shut down Ravensthorpe nickel mine. This is by Cecilia Jamasmie at mining.com. And this is referring to the Ravensthorpe nickel operation in Western Australia. And here is a quote from First Quantum, who said in a statement, quote, despite our best efforts to maintain operations by transitioning to a new operating strategy that involved ceasing mining activities, processing stockpiles, and altering its approach to production, the site is incurring significant current and projected losses, end quote. The company said the decision to shut down the mine with the process starting on May 1st was the best strategic move as it leaves the ore body intact for future value. And just a few headlines. Five Eyes countries working to fight critical minerals dumping, Canada minister says. This is Reuters via mining.com. And just a couple of paragraphs here. Canada and its Five Eyes alliance partners are working on putting forward a response to tackle the price manipulation of critical metals, Canada's Finance Minister Chrystia Freeland said on Tuesday. The U.S., Britain, Canada, Australia, and New Zealand have what is called the Five Eyes Intelligence Sharing Network, and the finance minister from these countries met last Thursday for the spring session of the IMF in Washington. Freeland said that she and her counterparts from the Five Eyes Alliance discussed last week on how these countries could friendshore their critical minerals supply chain to fight the dumping of critical minerals in the international market by large producing countries such as China and Indonesia. You know, I mentioned many times, I don't know why they don't do what the Chinese do, which is stockpile. Why not stockpile? If they're cheap, maybe even cheaper than producing, I don't understand why they don't just stockpile. And just a couple more headlines. White House eyes Russian uranium import ban while House bill stalls. Bloomberg News via mining.com. Another headline, GovEx plunges as Niger uranium project faces junta deadline. And Niger's military leaders wanted this mine to be started by July 3rd, interestingly, and they risk losing the project license if it's not started. Another headline, Nigeria revokes 924 dormant mining titles, seeks new investors. That's a headline from Reuters via mining.com. And another story along these lines, Panama completes process of mining concession cancellations. So as these metals become more valuable, we see what could loosely be called more resource nationalism. And that's Bruno Venditti at northernminer.com. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. And the U.S. 10-year bond is yielding 4.63%. That is 0.01% higher than last week, so edging a little higher. The UK 10-year gilt is yielding 4.3%. That is 0.08% higher than last week. And the Italy 10-year bond is yielding 3.84%. That is 0.02% higher than last week. So 10-year bond yields edging higher just slightly over the last week. And turning to precious metals, gold is trading at $2,329 even per ounce. That is $6 higher than last week. Silver is trading at $26.99 per ounce. That is 3 cents higher than last week. Platinum is trading at $960.30 per ounce. That is $28 higher than last week. And palladium is at $980 even per ounce. That is $38 lower than last week. Turning to our industrial metals, copper is trading at $4.66 per pound. That is 17 cents higher than last week. Iron ore is trading at $110.16 per metric ton. That is $6 higher than last week. Aluminum is trading at $1.18 per pound. That is 3 cents lower than last week. And lead is trading at $1.01 per pound. That is 3 cents higher than last week. Nickel edges a little lower at $8.75 per pound. That is 18 cents lower than last week. And tin also lower at $14.70 per pound. That is $1.34 lower than last week. So tin taking a break. Cobalt is unchanged at $12.62 per pound. And lithium is unchanged at $15.26 per kilogram. Uranium is lower at $87.35 per pound. That is $2 lower than last week. And zinc continues higher at $1.34 per pound. That is 6 cents higher than last week. So a tale of many markets here, as most metals churn sideways, with the highlights being copper and zinc moving higher and tin taking a break, and those are your metal prices. Coming up, I'm very pleased to welcome Cecilia Jamasmie, editor-in-chief of Mining.com, back to the show. We discuss BHP's bid for Anglo American in depth. We go into the history and also where this deal may be going. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome to the program Cecilia Jamasmie, editor-in-chief of Mining.com. Cecilia, congratulations on becoming editor-in-chief at Mining.com. It has been a long time coming, and you have earned the role.
Thank you, Adrian. I'm very happy to be here in the podcast again, and of course, very happy to be now heading the website that I saw be born many, many years ago, about 17 years ago.
What a journey you've had. And you've always, as we were discussing before the podcast, had a sense of what is exciting and interesting. And I've always seen that. So I'm very excited and happy
Thanks.
For you, and excited for all the stories I'm going to read. And we just had a big one that just happened here with the massive bid by BHP for Anglo American, a all-stock deal. It made major waves. I mean, I saw it at the main headline on Bloomberg.com, headlines on Wall Street Journal. I guess my first question for you is, how big of a deal is this?
Well, it's a very big deal because let's say that BHP ends up being successful in this proposed takeover. It would be the world's biggest copper producer, trumping by far Codelco. It would be the number 3 iron ore producer, the top metallurgical coal producer, and the number 3 nickel producer. So really, it's a huge deal. Those 4 commodities themselves, he would be one of the 3 largest, if not the largest.
Yeah, I mean, you really highlight there just how big of a deal this is. So what do you think motivated BHP to make this bid? In a sense, I think some people were surprised that, I didn't expect it. What do you think motivated it?
Well, basically, it's been the devaluation of Anglo American compared to its peers in a story that we did in Mining.com, actually, with the top 50 biggest miners in the world. Anglo American is not even in the top 10. On the contrary, it's in the top 10 of the worst performing companies. And it's bizarre because in December, we talk about this briefly in the podcast as well. Anglo America suffered the worst one-day share price fall since 2008. 2008. And then not only that, shortly after, it revised down copper production by 20%. And copper has been one of the big flagship commodities for Anglo American because they do own the world's highest quality copper mines. They are in Chile and Peru. So they have a huge, important, very valuable presence in the copper market. And as we all know, copper is like the hot commodity right now. because of the role in clean energy, electric vehicles, and all that is related to the transition to a more sustainable economy. So I think that's one of the main reasons. In a nutshell, it was the fact that the company is undervalued compared to the peers. So it's not a surprise that someone would want to take that opportunity, someone with lots of money, like BHP.
And what led to this undervaluation, say, and even refresh our memories if you can for December? Like, what were the issues? Like, my impression as I read all the articles on Anglo American and BHP is that it was general operational issues. Is that what was going on? Like, do you know why the share price was basically undervalued?
Analysts blame Duncan Wambler, the new CEO, not that new, he took over in mid 2022, just as Anglo American had reached a record market capitalization of more than £50 billion. That's 2022. 2 years later, the largest rival, BHP, is offering less than £20 billion for the same company. So it makes you wonder what happened. One of the things why the new CEO is being blamed is because they went and bought this specialty fertilizer company in the UK that had been branded as the biggest new thing, like the mine that was going to take the UK to a whole new level because it was going to be able to compete in terms of fertilizer with Canada, with the Belarusia, etc. And the truth is, it's a project. There's nothing very certain about it. And that implied a big write-off as well to pay that. It was a $9 billion acquisition, and shareholders still don't see any positive cash flow or anything positive really coming from this acquisition. And at the same time, Anglo American owns De Beer, that is the biggest diamond producer after Alrosa in Russia. And so Anglo American owns De Beers, the biggest diamond producer after Alrosa, the Russian company that is like all blocked by the sanctions. So really, they own the biggest diamond producer, but the diamond market is not doing well at all. All diamond producers have lost a lot of market capitalization. They have to reduce production just to get rid of the stockpile. So we have another big hole in Anglo American right there. And the third hole comes in the platinum division that also is not doing well. The price for this precious metal, platinum groups, has really nosedived in the last year. And Anglo American is not the only one that is cutting not only production, but it's cutting thousands of jobs. Thousands of jobs. Sibanye, Stillwater, also in South Africa, is doing the same thing. And the job cutting is getting even to the operations in the US. So we have three major components that I just mentioned here: the acquisition of the fertilizer project, diamonds, and platinum. And all of this started to eat into Anglo American valuation, whether we like it or not.
So interesting you bring up South Africa, because, of course, part of this deal, and it's a complex story, isn't it? It's a complex company. There they are with De Beers. They have this potash mine in UK, or at least this project. And then as part of the deal that BHP wanted to do, they wanted Anglo American to divest itself of its South African platinum and iron ore assets. So can you speak a little bit about that? Like, what is going on there? Do you know the reason why?
Well, knowing the reason, not exactly, but I can only tell a little bit of what I know that could be one of the reasons. And first of all, BHP is not liked in South Africa. They know that they would not count with the support of the politicians or the government because, well, back in the day, 2015, they bought a company, they divested all the unwanted assets that were mostly South African assets. And they created South 32, and that company has not done fantastic. In the words of one of the South African officials, BHP has done nothing for the country ever. So that's it. But at the same time, I think BHP wants to reduce exposure to any potential market that could be difficult or could be unstable. And it seems that BHP for the longest time has seen South Africa as both unstable and difficult. So they really, if you look at the history of BHP, they have not invested much in the country.
It's interesting you mentioned that. I was actually doing a search on ChatGPT just to say, does BHP have any assets in Africa? And it said, yeah, kinda, but not really, was basically if I had to summarize the answer, and that they had, focused more on, say, Australia and just other parts of the world, maybe North America, South America. Okay, interesting. So then while we're on the topic then of South Africa, let's say that BHP is not loved then in South Africa. From your perspective, is there any risk of a kind of resource nationalism? Because, Anglo American, from my understanding, it has a history in South Africa. So could you just sort of speak to the history? What is the history a little bit? And is there a chance of resource nationalism?
For sure. Well, I think that Anglo American is very dear to South Africans in general because it's one of the most talked to stories in the mining industry. All started in 1917 when a German-born businessman, Ernest Oppenheimer, he used to be in diamond trading, and he just went to South Africa to start a business. And he was able to raise at that time £1 million just to found the Anglo American Corporation. That was the name. And the main objective was to mine gold around Johannesburg. But also, kind of the second goal was to see if they could find, he wanted to find diamonds. So he had those two commodities in mind. And you fast forward 100 years, and we see the group now is the world's largest producer of platinum and operates one of the highest quality copper mines in Chile and Peru, and it also owns the Beers Diamond Group, etc. But it's not doing really well. And they are going through a revision, it was announced, to deal with the assets that are dragging the company down. But so far, we haven't seen any action.
Okay, interesting. So you mentioned the copper assets then in South America. And when I read all the different articles that are posted on why BHP might want to do this acquisition, can you speak to the copper assets then in South America and what is there and maybe what BHP thinks it can do there?
Definitely. Well, Anglo American runs several operations in Chile, copper operations, being Los Bronces, one of the main ones. And in Peru, a few years ago, it opened Quellaveco. That was at the time the largest copper mine recently opened. I guess it was in the past decade. So buying Anglo American just because of those assets would improve BHP exposure to copper will grow to 40% as a company. And in terms of world market, it would be 10% of the world market.
Interesting. And we cover South America a lot. There's been a lot of change in Chile politically. It's not really seen as quite as safe as it might have seemed, a few years ago. What kind of political risk do you think that BHP faces? There's a lot of pride, from what I understand, in Chile in being a major copper producer, and that Codelco, even for all of its problems, it is kind of an icon in the country. And all of a sudden, if BHP comes in, this, Australian mining company, and all of a sudden, we're the biggest now. Do you think there's a political risk there?
It could be, whether it's in terms of market control or a political issue, is definitely going to be an issue, particularly because the current president is a young person who most of the young people right now is very environmentally conscious, and his government has given a very hard time to lots of big mining companies with fines, with constant checking in the pollution levels, etc. So that in itself is a risk for any company. The moment you trespass certain amount of emissions allowed, boom, big fine is going to follow you. And they're very tough in that situation, particularly with big companies. Now, in terms of market control, I'm not sure, very honestly, I'm not sure BHP could compete with Codelco in terms of the amount of copper assets, but Codelco's assets are all very old and they're all running out of copper, and the company needs a bunch of support, millions and millions of dollars to just keep them operating or at least producing at a certain level that allows them to compete. So even if BHP has less operations in Chile than Codelco, eventually it could take over. And I don't think the government would like that. Codelco is a state-owned company. And as you said, all the Chileans are very proud of it. Many people have grown and had their careers thanks to this company. And basically, Chile is like the main export. So I don't know what Chile would do without copper. Well, right now we have lithium, and that's important. But before lithium came into the market, into the possibilities, it was just copper. So it was like the golden goose. And if you kill the golden goose, what happens, right? So I think that's why Chile also is putting a lot of effort into the lithium market and trying to keep control of it, because they don't want the same to happen that it happened in the past.
Right. It's like they're trying to diversify and maybe they see the writing on the wall. I mean, we've been following this Codelco story. They bring in new CEOs and, you can't make copper appear out of thin air no matter who you hire. It does sound like, judging from the headlines alone, for what it's worth, it does seem to be a depleting asset to a certain degree. Now, okay, so we have a lot of background here now, which is great. So where are we in this story then? So BHP has made, as far as I understand, an all-share offer. How is this being received? My impression was that Anglo thought it was undervalued. Could you speak a little bit to what has happened since the offer?
Certainly. Well, Anglo American kept quiet the first day. They did not respond to emails or phone calls asking for statements, and with good reason. They just were analyzing what to say, as always happens. But in the meantime, shareholders, the South African government, the Chilean government, everyone had something to say. And the majority all were saying this is opportunistic, the company is undervalued, BHP knows that can do better, but it went with like the low offer possible to see if he can get away with. And of course, the next day, Anglo American comes back and says exactly what the market was saying. This is not good enough. It's highly unattractive. Does not value our company. Does not value our assets. It would force us to get rid of some assets that not necessarily we want to or can just easily get rid of. So we are right now under competition rules. BHP has until May the 22nd to come up with a formal takeover offer. This one was kind of like an unsolicited approach, not friendly, but like not by the rule. And now the only option they have now is to come out with a formal proposal to be submitted to all the antitrust, anti-monopoly institutions in all the countries where Anglo American operates, et cetera, et cetera. I think they will do it. More than I think. I'm sure they will do it. Now, whether Anglo American accepts it or not, that's a different story. It would be very interesting to see what happens. Both of them could win a lot by basically going forward with this proposal. BHP, we already said how much they will win, but Anglo American also would allow them to stabilize their balance sheet. As we said, in only 2 years have gone from like record market capitalization to being a third of what BHP is now. And at one point, they were like almost head-to-head competitors.
Do you know the argument then that BHP is making to Anglo American? Is it your classic, we're going to have synergies here, so our costs are going to go down? Like, what's the value proposition other than, I suppose, maybe it's we're offering you a premium over the stock price? Like, is that basically the argument as far as you understand it?
What they did say in the press release when they made this public, it was basically that we are offering more than the value of your shares before we made the offer. That's the typical. But there's nothing in detail that I can mention right now that they could say. Like in other mergers, they talk about synergies, they talk about buying the company and then spinning off certain divisions to like maximize value for shareholders. Here, all I know for now is all about the share price and the value of the company.
Interesting. And what are the analysts saying if you had to sum up? Like, are they mostly negative on this deal, or are some positive, some negative? Like, from your reading, what is your sense of what the analysts are saying?
The majority, what they're saying is that the current price, what BHP offer, it could be negative for Anglo American. There's nothing alluring there for Anglo to go after. Especially, I don't know if you read this, Adrian, but last week it became public that US-based Elliott it was building up a stake in Anglo American, and it's up to $1 billion stake. And this fund is well known for being a wave maker. Back in the day, a few years ago, it was the one that started like a shakeup at BHP itself, saying that the company should get rid of the gas and oil business because of the pollution for the environment, for the valued shareholders. And eventually he got it, and BHP sold that, created a new company. So having that guy as one of their shareholders is a totally different but equally challenging situation for Anglo American. The history of Anglo American and his complex structure has made it difficult for the company itself to change, and it's made it challenging for competitors to try and seize the opportunity and buy the company. But most of the analysts are changing the tone. At first, they say this is not good. Nobody's going to win anything here, not the shareholders, not the company. But now they're saying, well, if BHP actually comes with a better proposition, they can see a win-win situation for both companies.
Right. Like BHP theoretically has more cash and they can stabilize the balance sheet. Maybe they're theoretically better operators, perhaps, is one of the underlying speculations here. And so maybe they can clean up the situation, shore up the company, and have a behemoth, a giant in the industry, which is basically, as we wrap up here, kind of where I want to go. Like, what do you think this means, looking at the mining industry as a whole? In terms of, concentration and consolidation. Like, do you have any thoughts on what this means for the mining industry?
Oh, well, the mining industry, we are going to see definitely if that happens, a big change in structure, because right now, when you think about big miners, you think BHP, Rio Tinto. But personally, I also think Anglo American and a few others, Vale, etc. But this is going to be a huge change in the concentration of the most valued assets or kind of assets that are right now in the world are going to be in BHP hands. I think we're going to see more of this. Miners are always trying to buy each other, especially if the capex collapse and some commodities are not doing great, then comes one that is doing a bit better than the other one and tries to buy the one that is not doing so hot. Because really, digging a new mine takes a long time. It's very expensive, causes problems, protests against environment, resource nationalism, and when labor and material costs are higher, also doesn't make a lot of sense to build new mines. So that's why I personally think there's going to be more of these mega deals coming up if all the market conditions remain the same.
As a final question, is there anything that we haven't discussed about this story that you think should be mentioned?
Well, if you wonder, or if you ask yourself, was BHP the most obvious bidder for Anglo American? I would say no, not for me, not for many of the well documented analysts that I follow, because if you think about it, BHP recently bought a copper and nickel miner, Australian, called Oz Minerals. That's less than a year ago, and still reeling from the Samarco mine disaster in Brazil. It's like dealing with lawsuits and settlements. And as we already mentioned, it's not a friend of South Africa, having created and demerged South 32. So all those points makes me personally wonder how much more BHP can really offer Anglo American, considering all these other sources of expenses that it has going on. We have Rio Tinto, which bought a South African business of BHP in 2012 that is probably better place to consider a merger and acquisition right now. That's all what I think.
That's a very interesting point. And I mean, didn't BHP at one point try and take over Rio Tinto? And they also remember the big Saskatchewan, Potash Corporation.
Yes,
I mean,
Potash
they have a bit of a history of trying to make these massive acquisitions, don't they?
And at least with the very, very big ones, as you mentioned, Potash Corp and Rio Tinto, it didn't go well. It just didn't work. Especially now, it's a very interesting story. I'm very sure we're going to be hearing about for months because the complex structure and the very diversified business that Anglo American has makes it extra difficult, but also extra exciting if it's successful.
Well, we will be following on the website there on mining.com and northernminer.com. Cecilia Jamasmie, editor-in-chief of mining.com. Thank you for joining us and sharing your insights on this week's Northern Miner podcast.
Thank you for having me. Until next time.
Thank you once again to Cecilia Jamasmie for appearing on this week's episode of the Northern Miner podcast. So we will see what happens with the BHP's bid for Anglo American. Thank you, dear listener, for joining us once again. If you enjoyed the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.